Well, thank you, James. Thank you, Sumeet, for coming on to this. This panel for the next 20 minutes is about what has changed with DePIN. So I'd like to kick it off with just a softball question. What initially drew you to DePIN and what makes it exciting field for you today?
Cool. Thank you so much, James. Let me just give a quick introduction, Rob. So I'm Sumeet. I'm one of the investment director at Cypher. And we are a fund which invests in venture, Bitcoin mining, fund-of-fund liquid tokens. And like what got us interested into DePIN is like Bitcoin mining is sort of a DePIN solution where you have different physical infrastructure generating value. And the first deal we did in DePIN was back in 2022, which was Peak Network. And that kind of caught our attention. Okay, they are building a layer which is built for physical infrastructure, and why they would need to become on, they would need to be on chain. And that's when everything started becoming clear that, okay, the reason for being this physical infrastructure on chain is the value that can be extracted for the general audience, for the users. So that was our first gateway into DePIN. And since then, we have done about a couple more deals in the DePIN solution, and still looking at more and more companies over there.
James?
So we launched Modular 2 years ago. We managed around a $50 million fund. Prior to this, my co-founder and I, we were traditional public-private technology investors. I think in 2020, 2021, seeing the ability of Helium to be able to scale, have 2 million boxes that were sold around the world, I think it really pioneered this structurally new model around capital formation, around getting a large democratized user base to do it, and really cut costs in a lot of areas, whether it's the cost of the device, whether it's the labor, the rent cost, the maintenance cost. I think since then, you've seen this huge explosion in DePIN kind of project formation, and people have slowly applied this to a broader base of industries, whether it's GPS data with GeoNet, whether it's mapping with HiveMapper, whether it's weather data with WeatherXM. I think specifically DePIN is a fairly unique sector in crypto. I think while it leverages a lot of the reflexive kind of token kind of formation benefits of crypto to be able to bootstrap the network, but I think it's quite unique in the sense that the demand side that flows in, which often is used to buy back the token, return capital to the token holders, is quite orthogonal to crypto. If you think about the vast majority of crypto projects, whether you're an L1 that's selling block space, whether you're a DeFi protocol tied to lending, staking, trading volumes, all those are relatively quite circular in the crypto ecosystem. I think DePIN is one of the first few scaled outcomes that really has this orthogonal kind of external non-crypto demand vector, which I think allows the space to broaden and grow.
Thanks for that. One of the things that both of you brought up was around the token side of things. So in this low float, high FTV world, what do you look for in DePIN projects when it comes to sustainability? Like, what are the big qualities in the founders, qualities in the teams, or even the mechanism design? What are you looking for I guess, promoting sustainability?
So I can start off with a few. I think teams for DePIN tend to look quite different than most crypto protocols. I think for most crypto protocols, people focus on a lot of teams that are very crypto native, that have been in the crypto ecosystem for a long time. I think DePIN is one of those where we actively look for founders that don't come from the crypto background, at least prior to this specific project, and come from an industry that this was relevant to. If you look at the background for Mike Horton, who's the founder of GeoNet, he spent 2-3 decades building in the RTK GPS location data space. If you look at Ariel's background from HiveMapper, prior to starting it, he had no crypto background. He was at Yahoo Maps very early, right? And all of their experiences draw from a very traditional industry. I think what you've seen more often than not is that DePIN founders have been able to learn the crypto aspect of building the business a lot easier than they are to go back and learn the relationships, the customers, all the industry nuances of building in the mapping space, the weather space, the GPS space, et cetera. And I think that's one very common, consistent thing that we look for in DePIN teams that we invest in. I think on the supply and demand side, I think most DePIN projects tend to not have a huge issue bootstrapping some initial supply. I think, like there's a minimum FDV that the token will come out at. There's some payback up to some threshold that's attractive to get the initial supply dynamics. I think increasingly with the last 2-3 years of building in DePIN, you've seen an increased focus from investors to see the revenue ramp along with the network ramp. So if you look at Helium building their IoT network, they got to 2 million boxes for IoT connectivity, and really there was no clear plan of how do we turn on monetization, who are the customers for this, right? Who do we sell this to? And I think by the time they got to the end of it, they realized this is actually a very tough challenge, and we need to re-architect and rewire the customers and the business model for this network. I think if you contrast that with Hivemapper and GeoNet, for example, Hivemapper today has around 10,000 drivers around the world. They have somewhere between $1 million to $2 million of recurring revenue. They've mapped probably, call it around a third of what Google Maps has around the world, but they've already started to turn on revenue and sell to very large, either traditional TAC or map customers out there. If you look at GeoNet, it's very similar. Today they have around 7,000 to 8,000 devices around the world, but even when they were at, call it a quarter of that scale, they already got to something like $250,000 of revenue to prove that, hey, at this current scale that we have, we're actually able to turn on and monetize the network. And I think that's been the biggest difference looking at these last 1, 2, 3 years of investing in DePIN compared to 5, 6, 7 years ago when the model was just getting started.
Yeah, I think for us, just two things. One is the distribution. Can the founder and the team do this distribution for the physical devices if they are doing that? And the second thing when you say about low market cap, high FDV is every token goes through a J-curve. And the way to bring the J-curve back is by earning revenue and growing the token in that way. So as James was mentioning, that can they sustain this long cycle of continuing to revenue, start plugging in the revenue coming in, and that's when the token would come up. So that's what I think this what separates DePIN from any other normal token solution, because you can actually see the revenue coming along. You can see a strong token case where they are earning tokens from running the physical devices, and actually it's proof of work in a way also. So I think that's what separates them, and that's what sustainability looks like for DePIN. Would love to get your answer also from Raul.
Yeah, so I think when it comes to approaching sustainability, kind of what James said, it's like really from like the founders themselves. A lot of these aren't like your crypto native founders, and I feel like most of the teams who are crypto native to start aren't building for the right reasons. They're just kind of shoving a token into things rather than really thinking through the problem and attacking it from like the infrastructure side, which needs to be kind of scaled appropriately. So we at Vault really index on the founders themselves. We've only made one investment in the DePIN space as of right now within Roam Protocol, really thinking through on the Wi-Fi side and the open broadband. So that's something that we've taken a look into further. We recently kind of like put out a request for protocols, really defining it between like environmental data, defense data, and then just thinking through a little bit more. So I think just kind of shifting gears a little bit, what other opportunities do you, what opportunities do you think that the DePIN market can kind of penetrate going forward?
I think it's generally all the physical infrastructure. As I think Amit was mentioning in the previous panel, like how the data from fertilization, how the data from trucking network can go into blockchain and add value to the whole ecosystem. I think that would be interesting from the Web2 side, moving IoT into blockchain. That would change the whole, that's something that excites us also, to see how it's being evolved, how things are coming on chain, and how they'll be utilized. On the back end, if you see like large companies are already using some form of IoT, which are on their central servers in a way. So if that can be built on top of chain, maybe in private or public, I think that could be a big area of opportunity for a lot of blockchain companies to look into.
I can talk about a few categories that we spend a lot of time on. I think location-based networks continue to be really interesting as a category. I think that's one that's just getting started, even with the number of outcomes that you see out there with Helium, Hivemapper, GeoNet, et cetera. I think there's going to be a large number of industries where the threshold number of boxes you need to get to hit revenue scale or velocity is something on the order of tens of thousands, maybe hundreds of thousands, but not in the million plus, which is a lot harder to get to. I think that's a category we think about a lot. I think the second one is there's a lot of these resource networks across storage, compute, GPUs, connectivity, et cetera. I think that has been one big unlock I think the biggest difference you're going to see with DePIN projects this cycle in that category is a lot of the previous ones didn't focus about how do we actually bring this to the end user and monetize it. If you think about something like Filecoin, despite the number of capacity they have, it's actually still quite hard for your typical customer to use Filecoin as a network. I think if you looked at Akash previous cycle when they were just a CPU network, it was a relatively similar dynamic where it was quite hard for the customer to use it. You had to buy Akash tokens, you had to pay in Akash tokens, et cetera. I think increasingly you're seeing a wave of resource networks that's very focused on in what form factor, in what mode of distribution, in what product spec do I need to make this so that this is very easily consumable by the end customer. And we're seeing really interesting things happening where people are building decentralized data warehouses, data lakes. I think you're seeing things where it taps very passively into the consumer's broadband to scrape websites on the back end with Grass and some of these other projects. I think that's going to be a very big unlock and step function this cycle compared to last one.
Just to add to James' point, I think one big area would also be aggregation of all the DePINs. So that's where, in the end, it has to become easy for users to use DePIN and actually utilize them. So if someone can abstract that away for the user, how do I use Akash, how do I use storage, how do I use any XYZ solution, that could become a big game changer for consumer adoption in DePIN layer, and eventually what James was saying, getting the product in the hands of consumer.
Do you see that expressed through essentially a box that unlocks multiple DePIN projects in one? Or do you see it, I know, James, I believe you guys did an investment into Parasail, if I'm correct on that, from like a restaking side of things, so it's more of like an accumulation and allowing different projects and further experimentation? Or do you see it from like a new way or I guess distribution mechanism that we haven't thought of yet?
So we are investors in Parasail. I think on the hardware side, it's still most likely to be dedicated hardware per project. And I think the reason for that is, one, there's enough general purpose manufacturing that has brought the cost of manufacturing these boxes low enough. I think most of these devices on the market call it sub $500 for the most part. But I think the second thing is that project teams really care about owning the end-to-end life cycle of the device shipping, the manufacturing backlog, when they iterate on sending the newest device into the market. And I think those are things that DePIN teams rightfully, naturally want to have a lot of control over. So the marginal cost reduction you'll see of going from $500 to $300 to the extent it results in slower lead times, kind of slower pace of shipping, I think that's something a lot of teams are quite reluctant to trade off. I think the capital side is one area you'll see kind of more aggregation in the DePIN space. There's things like witness chain where you can use restaked ETH to go kind of do various proofs, whether it's proof of location, proof of coverage, et cetera. We have portfolio companies like Andrina that are working with them. You can also see things like Parasail, which is like a layer on top where you can deposit general purpose capital. It could be ETH, Sol, Filecoin, any DePIN token. And it also creates this layer to run some sort of proof or verification of a DePIN event that's normally off-chain. So for example, the GeoNet devices that locate your GPS data, that's not an on-chain event. There's a kind of centralized server that's pulling that information together. I think over time, that may be a stack that people look and want to have decentralized, and you'll leverage a Parasail, a witness chain, some of these services in the middle to coordinate that.
Do you think this the centralization stems from more of a push on the regulatory side of things? So,
I think to date, most of the centralization is not a regulatory issue. I think it mostly has been, if you looked at the first wave of projects, Helium really went the full way. They built their own blockchain because Ethereum wasn't built to scale for their needs at the time, right? They had the entire proof natively built into the blockchain in terms of how different nodes would get pinged to ensure that, hey, you actually had internet connectivity, you actually had uptime. I think for purposes of speed to market, increasingly DePIN teams are saying, hey, the piece that we leverage the blockchain for is really guaranteed micropayments, i.e. if you perform X, you will get stream tokens hourly, daily, weekly, some sort of cadence, and you need the blockchain component for people to spin up wallets whenever they want to receive those payments and to be able to seamlessly swap that to repay the initial CapEx investment. I think as these projects mature, you'll see them slowly move some of these pieces that they may have set up as centralized in the beginning to try to gradually decentralize it. And in a very extreme example, you may have your own blockchain, or you may code the proof natively into the layer 1 blockchain that you're running on. In some of these other cases, you may just leverage a third-party service like Witness Chain or Parasail to go coordinate that for you and have economic collateral go run those proofs. So I think it's a very natural evolution. I think for the most part, we haven't seen many DePIN projects run into huge amounts of regulatory issues as a reason why they have to be more decentralized from the get-go.
I think this could be also a factor of how small the scale is of DePIN right now. Once the scale grows, the regulator eye will come into them. I don't think DePIN project right now have reached that scale. So it's maybe give it some more time, and then you might see some more regulation coming in.
Yeah, I definitely agree from the regulatory side. It's not an issue right now, but it's always something on the horizon, especially in certain jurisdictions when you're passing through certain value and dividends going forward. It gets on the radar of a certain organization. So. Yeah, so I guess moving on, when it comes down to, I guess a lot of these different networks are collecting data. How do you think about kind of the trustworthiness of said data, the incentivization of the different actors and stakeholders within these networks, as well as where do you think that there's opportunities for data DePINs or these more data DAOs going forward?
Yeah, I think Witness Chain is a perfect example of that, on how a non-DePIN entity or a non-centralized entity can actually prove that you are actually running DePIN. So that is one example of how it can be done, and that's how it's basically running like a federal authority to prove that you are actually saying what you are doing. So that's what needs to happen, and that's what will generate proof among the users that, okay, this is actually what's happening. Like, we don't want another situation like, recent company that happened. So, sorry for that. So yeah, I think that is the solution for making the proofs that you actually have we actually have the bandwidth, we actually have the storage that we are claiming to have, and showing that it happens in a different location, in a different range of megabyte, kilobyte, whatever that is, and same for any other physical infrastructure also.
One thing I've been thinking about a lot more when it comes to a lot of the AI side of things, in continuation with the data, is where are we getting these more physical resource networks where it's users need to perform an action like a task to earn. Do you consider this a part of the broader DePIN side of things, or no?
For us, we do loosely put it under the DePIN bucket. So for example, we've invested in teams that are trying to do kind of human reinforcement learning for AI training. And do that through a distributed workforce that can plug in anytime. I think HiveMapper has something very similar for the map labelers as well, who label maps, kind of will say, hey, this is the stop sign, this is the speed limit, and then that trains its algorithm to get better. I would say I broadly put it into the DePIN bucket. However, we have generally found just the moats for DePIN businesses to be stronger when there's a hardware and location component tied to it. And the reason is that if you need a network where you need 20, 30,000 devices placed distributedly around the world in very, very specific locations, it's quite hard to do that from scratch. It's quite hard once you already have an incumbent that's established doing that, that's brought the price point 80, 90% lower relative to traditional incumbents, for someone to want to come in and replicate that entire process over again. And you'll realize a lot of times it's the last 5, last 10%, last 2% of the network that's really, really, really hard to build out. And that unlock is what allows you to go convert and commercialize customers. So we do broadly place it in the DePIN bucket. I think Brain Trust with freelancers is another example. But we have definitely focused a lot more on kind of some of the more hardware-based ones where there's a capital investment that people are putting in return for kind of their ownership or earning of tokens.
I think for us, if there's a hardware component, we put it in DePIN. Otherwise, we find the latest category. If it's storage, then it's decentralized computing, decentralized cloud. So it's not technically DePIN because I think decentralized storage and compute have been for a longer time. DePIN is mostly physical infrastructure that, as James mentioned, there has to be hardware or a location-based component into it that adds the decentralization to it.
Yeah, I guess to take a counter on this, one thing that we kind of consider at Volt is kind of the data, and especially when it comes to human dynamic data. It's Frodobots is a great example of this. Not an investor or anything, but they have a little robot. You drive it around, but it actually is utilized to train a different data set for vision that could be used across all the various different use cases. I also think if you look at any of these like more visual robotics or ego-centric vision, one thing is like the first data set that was published by Facebook only has 3,700 hours. Like that's such a very low bar for a lot of these teams to kind of tap into. And I do think by having that human data on demand, you can be a data broker in addition to having a whole slew of different like use cases afterwards. Knowing that we're coming up on time, I would like to just leave us with one bold prediction for DePIN in the next year. So James, you go first.
I think you're going to see multiple billion-dollar DePIN networks. I think today there's one of them. It's really just Helium. Maybe a few more if you count Render and Filecoin, et cetera. I think it'll be normal for us to see multiple billion-dollar, if not 10 billion plus outcomes in DePIN.
I'll take a slightly bearish perspective. I think 99% of the DePIN products might die. The one who will survive will have solved distribution and supply and demand, because it's in the end, it's all about your products in the hand of end consumer.
Thank you, everyone.
What's your bold
Thanks
prediction?
for having us.
My bold prediction, I think realistically human data on demand is going to be like the next thing going forward. Like there's so many ways to incentivize people, especially in other nations where these incentives kind of line up for just brushing your teeth, like cooking food, anything of the sorts. And the low-hanging fruit, if you start to look at like all these open source data sets, there's like 100 hours after that 3,700 hours for the Ego 4D. Like there's so many different things to tap into where the bar is so low for teams to kind of incentivize users to record themselves. And if you own that entire stack, I believe there's a lot of different things there for the AI side of things of DePIN. Thank you, everyone.
Thank you so much.